Morning, good afternoon, good evening, wherever you are in the world. Welcome to our AIB Journals webinar, October 22 edition. My name is Klaus Meyer and I'm your co-host today. I'm professor of the international business at the IB Business School. We have created this series of webinars as a forum to share insights from our research and to discuss the broader implications. As most of you know, we are selecting papers that have recently published in either of our journals, be it the Journal of International Business Studies or the newer one, which we have a lot of focus on today, the Journal of International Business Policy. So we usually select 3 papers. We try to have senior and junior scholars talking to a common theme and then have a more broad discussion about the implications of this research for practice and also for policy, where appropriate. Today, we'll probably have a strong policy implications. We would like to engage with the audience, and we would like you to ask us questions. You can put the questions in the Q&A functions, and since we have 2 years of experience using Zoom, most of you are probably familiar with Zoom by now. So you put the question in Zoom, but you also probably know that you can vote up questions. So the co-host, which is JT Lee today, will be able to see your questions. So today, the topic is Belt and Road Initiative. That was a big initiative that was started several years ago by the Chinese authorities, and which seems to have shaped in some ways the international business activities in and out of China to some extent. And that's what we would like to explore. To some questions like, is it an economic initiative? It's a policy initiative. Is it about helping developing countries? Is it about helping China developing its resource security or other political objectives? All those kind of questions are likely to come up, but we will focus on the papers that have recently been published. And with that, I hand over to JT Lee, old colleague of mine. Many of people may not know this, but we've actually been colleagues 20 years ago at HKUST when I was visiting there for half a year. JT is now was head of department and is chaired professor and has done a lot of research on China-related business topics. So, JT, over to you.
Thank you very much, Klaus. Welcome all of you participating in this webinar. Thank you for the panelists. So what is BRI, right? What is Belt and Road Initiative? Okay. So I will just spend a couple of minutes to just cover a little bit the bigger picture, right? BRI is a global development strategy launched by the president of China, Xi Jinping, in 2013. It's linking at least 71 countries involving investment that are predicted to grow over $1 trillion USD. The BRI project provides host countries with opportunities to address their infrastructure gaps. Of course, there are also a lot of concerns with geopolitical ramifications. And of course, later on, 2015, China also added the digital Silk Road, which have more recent emphasis, aiming to improve BRI host countries' telecommunication networks, AI, cloud computing, e-commerce, and so on and so forth. Well, since its launch about 9 years ago, right? So what was the progress so far? Well, there was actually a recent article by Wall Street Journal, which looked at Belt and Road 2.0. Basically, the idea is that China has spent $1 trillion to expand its influence across Asia, Africa, Latin America, so its Belt and Road infrastructure program. But now China is working on reassessing this program. Of course, some of the projects did not go as planned, right? Some of the host countries actually, because of the slowing global economy, combined with rising interest rate and high inflation, have left struggling to repay their debts to China, and some of these projects are not working well. So China in the process of reassessing its Belt and Road, what we call the Belt and Road 2.0 now. Just last weekend, just try to bring up this up to date, right? Called Xi Jinping, the president of China, at the speech at China's 20th Party's Congress, actually mentioned about Belt and Road 2 times, right? Because there are some debates whether Belt and Road has been a failure or success, right? Whether China is continuing this initiative. In 2 places in his report, he mentioned that he emphasized, we want to implement a more proactive opening strategy to co-build Belt and Road as a platform for global collaborations and co-build high quality Belt and Road development. So emphasizing co-building, platform for global cooperation, and development, high quality development. So these are actually the new focus now for the 2.0. We are very pleased today. Of course, BNI also, we see increasing research and intention in international business. So we are very pleased to have several authors with us today, right? So we will talk about the Ari, we'll talk about the first paper, which look at foreign direct investment along the Belt and Road from a political economy perspective. And Ari and I, we also had the pleasure of working with other colleagues to develop this special issue for the Journal of International Business Policy, where we can bring out some of the policy implications of the China's development strategy for the world of international business. And we have 8 articles there, 5 papers, 2 commentaries, and 1 editorial. And we are very pleased to have authors from 2 of these papers, Peter, and Hinrich and Ari, join us with their presentation, with their sharing their insights. So I guess we now ready for our first paper by our first speaker will be Ari Van Assche, who is joining us today from HEC in Montreal. Ari will talk about the work on foreign direct investment along Belt and Road from political economy perspective. Ari, all yours.
Thank you very much, JT, and thank you all for joining. So this is a joint work with JT, with Li Zhixiong Li and Gongming Qian. So the starting point that we took in this article is that one of the defining characteristics of the Belt and Road Initiative is its state capitalist nature. So if you look at Belt and Road Initiative projects, they generally are selected by the Chinese central or regional governments. They are mostly financed by loans from state-owned policy banks or state-owned commercial banks or state-owned sovereign wealth funds. And if you look at who actually executes the Belt and Road projects, they are predominantly executed by Chinese state-owned enterprises. Just to give you one indication of this, which is from our editorial in the Journal of International Business Policy, you see a table on this slide where if you look at the bottom row, it shows that for the 191 Belt and Road projects in the Reconnecting Asia database, about 2/3 are exclusively executed by Chinese contractors. And if you go to the top row, what you find out is that for those projects that exclusively were financed by Chinese sources, the percentage of projects that are exclusively executed by Chinese contractors was about 80%. So state capitalism certainly is a defining characteristic in the Belt and Road Initiative. This has led to a lot of discussion, especially in Western media and Western circles, about the geopolitical characteristics of the Belt and Road Initiative. But what actually we decided to do in this paper is focus on what this means for business. Also, especially among Western businesses, this has led to some concern. And so here's a quote from the Council of Foreign Relations that actually describes this concern. So the Belt and Road Initiative, it says, creates unfair advantages for Chinese companies, leaving US and other foreign companies unable to compete in a number of Belt and Road Initiative countries. This is the concern of the Council of Foreign Relations. What we try to address in this perspectives piece is to what extent this is true and under what institutional or geopolitical circumstances one can actually expect non-Chinese firms to have a higher chance to be included in Belt and Road projects, and in which ones they have a less likely chance to be included. So the two questions we actually ask in this article is, how does the institutional and geopolitical environment surrounding the Belt and Road Initiative influence the likelihoods that Western or host country firms get selected to participate in a Belt and Road project? And what strategies can these firms develop to increase their selection chances? In order to address this, we have developed a simple workhorse model, which is a one-tier bargaining model. So what we indicate is that a Belt and Road project, generally speaking, is the outcome of a bargaining game that takes place between China and a host country. And they bargain about a lot of different things, but one thing actually they also bargain about is which type of firm will be executing the BRI project. And here they actually might have very distinct preferences. We suggest that China generally prefers state-owned enterprises, and we explain many reasons why this is the case, generally because of China's state capitalism. But what we point out is actually that the host country might have reservations about the legitimacy of Chinese state-owned enterprises. And so what we want to understand is what factors drive this legitimacy problem of Chinese state-owned enterprises. And we point out that there are two factors that will, in the end, influence the bargaining outcome, one being Chinese state-owned enterprises' legitimacy gap in host countries, and second, the host country's relative bargaining power. Here is a model. This is just to demonstrate that we have a nice figure in our paper, but I'll focus just on a couple of things. So the first point we want to make is that there actually are different reasons why Chinese state-owned enterprises might be facing a legitimacy gap in a host country, and they don't all have something to do with geopolitics. There is a very nice and wide literature that builds on the varieties of capitalism framework that points out that depending on the institutional environment, it might be that there is more skepticism about Chinese state-owned enterprises in some systems than in other systems. To make it very simple, if you're in a liberal market economy where the government has a more limited role, there is more skepticism of state-owned enterprises, whether it is local state-owned enterprises or foreign state-owned enterprises. And in more state capitalist systems, it is normal to have governments playing a role in business. And so there, the skepticism might not be as strong. So building on these ideas, what we simply point out is that we should expect that in host countries where the institutional complementarity with China is lower, being perhaps more liberal market economies, the legitimacy gap of Chinese state-owned enterprises and other types of state-owned enterprises is higher, and this would increase the likelihoods that local firms or third country multinational firms get selected to participate in Belt and Road Initiative projects. Of course, I indicated that there are non-geopolitical reasons, but there also are geopolitical reasons. So we are currently certainly moving toward a more bifurcated global economy where certain countries are more aligned to China and other countries are more aligned to China. And one, of course, can expect that in countries that are geopolitically less aligned with China, that there is more skepticism towards Chinese state-owned enterprises. I'm just thinking about Canada, that at a certain moment was concerned about the fact that CNOOC might want to purchase a Canadian oil company. And so this was considered concerning because of the national security implications. So what we ultimately, as a second proposition, put forward is that in host countries that are geopolitically less aligned with China, the legitimacy gap of Chinese state-owned enterprises is larger, and this would increase the likelihood that local firms or third country multinationals get selected to participate in a Belt and Road Initiative project. We further really try to take advantage of some features of general bargaining theory. So bargaining theory says that a country's bargaining power in negotiations is very much going to depend on the outside options of both parties. If you have a very strong outside option, you can use that as leverage, and you can therefore perhaps increase your bargaining power. And so this leads to two further propositions. A first proposition is that if a certain project is of geopolitical priority for China, where they don't have a lot of outside options to do it otherwise, this actually increases the bargaining power of a host country. And if that host country is skeptical about working with Chinese state-owned enterprises, this might actually increase the likelihood of having non-Chinese firms getting selected to participate in the Belt and Road Initiative. And then finally, one thing that we point out is that, of course, the Belt and Road Initiative is not operating in a vacuum. As a response to the Belt and Road Initiative, the G7 last year proposed the B3W, which stands for Build Back Better World, where they're also trying to invest in infrastructure projects in very similar countries. For host countries that can actually choose between the Belt and Road Initiative and the B3W, they can use this as leverage to increase their bargaining power, and in some circumstances, it can also increase the likelihood that non-Chinese foreign firms can be selected for Belt and Road projects. We go significantly further in the paper. So one thing that we point out is that there are actually non-market strategies that individual companies can adopt. We call them geopolitical jockeying strategies, where they can actually try to improve their reputation either in China or in the host countries in order to increase their reputation in these environments. And that also can play a very important role in influencing their ability to participate. And so we have quite a discussion about what these geopolitical jockeying strategies can be. And we also spend quite a bit of time focusing on what our findings, but also discussions about geopolitics and state capitalism has for future research on the Belt and Road Initiative. So just to kind of finalize, and then I'll leave it to the next speaker. So what we've done is we've really tried to build on this state capitalist nature of the Belt and Road Initiative and try to think about what the implications are for international business related to the Belt and Road Initiative, but not focusing on international business from the Chinese side, but more from other countries around the globe. The moment that we did this, it of course became clear that you start seeing that institutions and geopolitics play a very important role, but also that third country actions start playing an important role on FDI decisions as well. And then one thing that now a set of authors, including David Thies and Michael Witt and other people have been pointing out, is that in this type of a world where geopolitics and state capitalism plays a more important role, there is need for companies and Western companies to build more political capabilities, which is something that perhaps did not get as much attention in previous work. I shall leave it here.
Okay, so thank you very much, Ari, for sharing your insights. Let me remind the audience that you can put your questions in the Q&A button box there, right? I already see we will have very active participation from the audience. People already put the questions there. We will answer them at the end of after the end of the three presentations. Our second speaker is Hinrich Voss, who is joining us from University of Bristol, England. Also on the panel is Professor Peter Buckley. Peter will join, who is joining us from Leeds in the UK. Peter will join us later in the discussion section. Hinrich, please go ahead.
Thanks very much. Good afternoon from the UK. A pleasure to present our paper on behalf of the team and going through some of nuanced perspectives, which is nicely building on our presentation indeed, as we're looking at Chinese attempts to invest in the Italian port system through a bargaining and property rights perspective. Now, in the interest of time, I'm starting with a research question, findings and implications of the work. So if anything to take away, this is the one slide, and then I will back this up with some of the data. So we're looking basically into three questions with this paper. First, asking how do the actors of the host country port nexus engage in bargaining processes of Chinese MNE's entry. The important aspect to take away from that question is, on the one hand, that we have an existing port nexus rather than we're looking into the building of new infrastructure that doesn't exist yet in a particular host country. Because we have existing nexus of port, existing nexus of actors, that needs to be taken into consideration when a Chinese firm is investing in a particular country, and we're delving into how this evolves. We're further looking into differences over time in the BOI influence to protection of rights and the capture of activities by the various actors. And the various actors here refers back to the port nexus, and I'll elaborate on this in a minute. And then as a third question, we're asking why do some processes lead ultimately to successful Chinese M&E entry while others don't. Now, we found that in the case of Italy, we have a multi-level bargaining process in which Chinese firms engage in. So if you like, building on Ari's work, where Ari talked about country negotiations and country bargaining, we find in the Italian case that Chinese firms have to bargain across multiple levels, from the port level up to the national governments, and potentially beyond that as well. But the focus here clearly for us is in the Italian system. And then within that bargaining that takes place, there are diverse interests and agendas the national government, national actors might have, versus the local actors that, and then these tensions have an influence, as we'll come to later on the success Chinese investments have in entering a particular country. Further, connecting to the questions about BOI influence over time, we do find that Chinese firms with lesser political clout find it more difficult to negotiate entrance into the port nexus in Italy, in particular as the BOI takes greater hold in intergovernmental negotiations and bargaining. Chinese firms, even state-owned firms with lesser political clout, find it more difficult to successfully negotiate. And then finally, kind of like bring those two elements together. Chinese firms are less successful entering the Italian port nexus. Then there's a strategic misalignment between national and local interests in what are the objectives this investment should fulfill. And there's less chance of success for Chinese firms when they have less political clout back home. Now, policy implications that we draw from this is that the allocation and capture of property rights needs to be addressed better in the Italian system to attract foreign investors. By this, we mean that it needs to be very clear who is allocating property rights within the Italian system, how can you capture economic rights within the Italian system. And this multi-level bargaining process is a hindrance. Likewise, the challenges that have become obvious around transparency, consistency, accountability of foreign investment screening, because we found some suggestion, such as evidence, that the screening works like differently depending on the political clout of the foreign investor coming in, and as a consequence, it becomes more difficult for certain investors to successfully engage in the process. And ultimately, and as a consequence of the misalignment pointed out earlier, clearly national objectives and local interests need to be better aligned to to increase the maximum potential of infrastructure that can be reaped, as well as to make this whole system of bargaining much more efficient for the host country and less time consuming. Now, that's a summary of the whole work. Let me go into some backup data. Now, we're looking at 4 ports across Italy, 3 in the north of Italy in the economic heartland, if you like, and 1 Taranto further down south. And I'm talking through one case, the case of Trieste, briefly, to indicate what we found before then expand this across all 4 cases. Now, the initial negotiations of the Chinese firms trying to enter the port nexus in Italy may take place at the port level, as in the case in Trieste. And then you'll see over time that negotiations are stalling, not working out. And then ultimately, the port of Hamburg comes in a rather quick, in a rather short time period, successfully negotiates entrance into the local harbors. Now, looking at the port level only would be an incomplete story, because we do not see the interactions across multiple levels that actually took place in that same time period. So we're expanding it, and as we did in this paper for all 4 cases, across the port authorities level, the country level, and to some extent, the international level, even though that wasn't the focus initially, we see that at the national level, we have a very volatile environment with changes in government taking place, which is influencing how China is perceived, Chinese investments are perceived. We have the Belt and Road Memorandum of Understanding being signed, which is positive for Trieste because it's one of the fine destinations, but ultimately this doesn't have an influence on what is negotiated locally at the port level. So it's those interactions across multiple levels and how different actors trying to protect their particular interests and engaging the bargaining process, which we find really insightful and interesting to take work forward into terms how Chinese firms are investing, engaging. And just to highlight a few points across the 4 cases, we have 2 failed cases with the case of Venice and Trieste. We have 1 case which is kind of stalling and not moving fully ahead, and 1 successful case, the case of Genoa. And that is in terms of success, a Chinese firms investing into the local port nexus. The cases, though, are nuanced and slightly differently because the bargaining processes evolve differently for different ports and ports cases. And we saw that Genoa and Trieste, there's national support for investments, there's less support for the case of Venice, even though there was a strong local support for a particular Chinese firm that was selected as an investor. In a nutshell, we are kind of trying to break down those discussions of saying it's a country level negotiation and bargaining process, and highlighting very strongly it's across multiple levels within the country that is bargaining taking place, at least in the Italian case. We underpin those analysis through property rights and bargaining theory by pointing out that Chinese firms are trying to negotiate access to capture particular economic rights in Italy, and that attempted access in a particular port is then calling other competing Italian ports to try to protect their particular economic rights, i.e. incomes. And you then have, as a consequence of that, bargaining taking place between other competing ports, national governments to endorse other ports to hold back Chinese investments, in particular other ports. While the potential target local port is trying to protect their own property rights to negotiate and allocate property rights to an investor they see fit. Which this shows there's a lot of internal negotiation bargaining taking place as well that needs to be considered by a Chinese investor. Likewise, we saw in the case of Genoa that other ports didn't really seem to challenge the property rights of Genoa, and Genoa could kind of move ahead and onwards in assigning and allocating a contract to Chinese investors. At the intergovernmental level, we have the Belt and Road MOU between China and Italy, and that led to different outcomes. On the one hand, an endorsement of particular ports as final BRI destinations, and even though it was only successful ultimately in the case of Genoa, and in the other case, a rejection of a local port by excluding them from the MOU as a final port of destination, and that in itself is a blockage then for further successfully negotiating access. Taking some of this work further, and I've indicated there's an international level, and I said the same around geopolitics, where geopolitics might come in and influence how locally agreements can be negotiated, caution towards Chinese investments, for example. There are questions to be asked further about the structure of port ownership and how this may influence and shape those negotiation processes. Because in Italy, ports ultimately national government state-owned. In other cases, ports are completely privately owned, and therefore the whole bargaining might look quite differently. And I'll leave it at here for this moment, and then over to the next speaker.
Thank you very much, Hinrich. Thank you. Thank you for sharing your insights. Of course, we again encourage all the participants to write down your questions in the Q&A box, right? So there are already examples there, so please do put your questions there, and we will get to all these questions once we're done with the presentation by the panelists. So our third paper will be presented by Torres, who is joining us from Queensland University of Technology in Brisbane, Australia. All yours. Thank you.
Thank you very much, and good evening, everyone, and welcome from Australia. First of all, I would like to say that our paper fits really well on the previous speakers, because they were talking about much more about the host countries, and we are focusing on the home country. So what's going on in China, and what is the logics behind, or the institutional logics behind the multi-level, particularly, and similar to the previous papers in terms of a multi-level perspective, what is going on there. But before we go there, of course, I would like to acknowledge my co-authors, Artemis Shang, Nan Zhang, and Saimei Chang. As I was explaining, in our paper, the most important for us, and I'm not going to repeat what Klaus and even Gilly explained, but one important thing that happened that caught our attention is this Cape province and municipalities that happens in 2015. So in 2015, the Chinese government, in relation to the BRR, said, well, we will support, or we will incentivize some province or municipalities, in the case of Shanghai and Beijing, to be more focused on this Belt and Road Initiative compared to other provinces. So in this selection of this Cape province, there was a clear institutional message that, okay, we selected the group of provinces, and those provinces, we will expect them to react different to this Belt and Road Initiative. So what we thought is, okay, if that is the case, how is these provinces reacting, not only this, but all the others that were not selected as being Cape provinces and municipalities, how are they reacting to this initiative, and how this is being translated in a firm level under internationalization? So our research questions is how the province responds to the supranational BRR, and how this is performed from a group performance and the internationalization of firms, and how is this relationship impacted by the type of provincial status, if it is KPM or Cape province municipalities or not. So we studied what happened after and before, and as I was explaining, we have three different levels of analysis. We start by the country level, meaning that there was a selection between what is K province and municipality, and what is not. But then within the KPMs, we wanted to understand how SOEs and private enterprises were incentivized and how they reacted, how they strategize, but also how they plan and they act on their internationalizations. So we are, of course, focused on the local government here, and here we want to explain that to us the most important rationale was to understand in the first instance what was the logics and the identity between how these institutions incentivize the incentivizing in China, as you know, not always is straightforward, not always is direct. Sometimes it's very much indirect, where we call the semi-formal institutions, that there isn't a rule, a strict rule, but there is a group of incentives or at least communications in the press and other means that companies know that if they do that, they will be aligned with the government strategies. So this is what we were trying to uncover. What is this logics, what it is in identities, and what resources were being played by the KPMs and not KPMs, but also how these institutions are responding to this macro level, if we can call it the country level BRR. So in our study, we decided to study this from a mixed methods perspective, because we understood that there was some part that were much more qualitative that we need to understand from all these dynamics, for example, in terms of language, in terms of incentivizing companies, in terms of sharing informations about what BRR is and how companies should be responding to that. And that was happening very much in a provincial level, not only so much in a national level, but in the provincial level. So we wanted to understand how these dynamics were happening and then how this differentiated from KPMs and not, from the K province municipalities and others that are not. And that's why here you can see the KPMs as a moderator. But also how these different governments, being KPMs or not, were responding to this formal supranational policies, the BRR. But then we wanted to understand, okay, from a qualitative perspective, okay, we want to understand how the governments and provincial governments are responding, but then from a quantitative perspective, how are firms responding to these different calls that were happening over there, and that we were in a firm level and in a quantitative methodology, merging a group of data sets. So here we see the hypothesis. Hypothesis A is relationship between the provincial government to firms' internationalization. Then we use the moderator as our hypothesis 3, but also we wanted to understand if the K provinces and municipalities were much better performing firms' internationalization. And yes, we could see that provincial governments were responding formally and informally. When they responded very much to the supranational, then immediately we could see a relationship on firms' internationalization. But interestingly enough, if they were from K provinces and municipalities, this relationship disappeared, and the moderating effect also disappeared, meaning that, okay, the Chinese government tried to incentivize a group of provinces in terms of BRR, sorry, but in reality, there is no differences between if you are a K provinces or not. And I think this, and we will talk about this later, it might relate with those provinces that were not selected to try to show that they are still very highly involved in the BRR. In terms of contributions, what we try to do is really to understand how these dynamics happen between the different levels of analysis, from a supranational, what we call supranational level, or central government, to the municipalities, and how this responds then to the central government, then goes down to the firms. And this response to us was really interesting to understand, because it was those provinces that were very vocal about what BRR is and what companies should be doing, even without being in a formal way in terms of policies, in terms of regulations, what we call the semi-formal or informal institutions, were really having an effect. And understanding that, I think, was really important. But then, from a qualitative perspective, when we understand the quantitative part, that we saw that, in fact, yeah, this is happening, and this response was really, really important. We developed a new institutional-based theoretical framework where we explain how subnational institutional frameworks are impacting not only the implementation of supranational policies, but also underneath that, the firm's internationalization. And this multi-level analysis, of course, allow us to show the importance of institutional-based theories, which we already are very much aware, but also goes further to explain how these institutions are impacting internationalization at different levels of analysis. We also, I think, we believe that we advance our understanding on the subnational differences in the response to the supranational BRR, and how provides an empirical evidence that provincial governments can support and encourage directly and indirectly enterprises to internationalize. And I think this is also important from the central governments. And by the way, this what is happening in China, we believe that can happen on other large countries, as Brazil, as Russia, where and even in the United States, where you have the central government, then you have municipalities and provinces with high levels of autonomy. We also explained that the current views understand China as a unified nation, and BRR has been studied as a draconian national strategy. But what our research shows is that there is very much a diversity in provincial government interpretation of what BRR is, both from a formal and informal response. And in fact, is this formal and informal response and sharing of information that is having a high impact on the firm level. So current research has been focused on a macro or a micro level, and what we are explaining is that there is a third layer it's the meso level factor that is also important to be explained and theorized. Future research, we believe that it's why this Cape province and municipalities logics is not having an impact in practice. As I explained before, the macro, the meso level, so the Chinese central government decided to support specifically these Cape provinces and municipalities with a logic behind, but not happening that, or what our results show that this is not having an impact on firms' internationalization. So what is behind that? What is going on there? We theorize some of the potential reasons why, but it will be super important to understand and uncover this a bit more. Uncover as well this semi-formal institutions, so how Chinese government more and more, and when I'm talking about Chinese government now, I'm talking about this meso level, this provincial level, how they share information is really, really interesting, where the many of the communication is not in a direct speech, it's not through direct policies, but very much in a semi-formal way. So understanding that logics behind as well will be super interesting, and how then finally how the firms interpret that, and how they as what are the mechanisms and the triggers that are happening at that firm level, coming from the meso institutions level. We believe that will be also super important. And I leave it here for the sake of time, and I look forward to hear your questions. Thank you.
Yeah, thank you very much, Ari, for sharing your insights. Thank all the panelists for presenting this very interesting research findings. Now let's open for the discussion, right? Please remember that, again, you can put your questions in the Q&A box, right? Please do take your time, put there. We have very good 30 minutes to address your questions, right? So we're looking forward to very interactive section following. Okay, so our first question goes to Professor Peter Buckley. Peter, okay.
I'm here, but my camera is not, so
no
you
problem,
just have to take a disembodied voice, I'm afraid.
No problem. So your paper is fascinating that you are looking at Italian port system, right? The investment there, multiple levels, right? You're looking at the bargaining and property rights perspectives. I guess I would like you to address two aspects. The first one, in terms of theoretical implications, right? So how does BRI allow you to extend RB theories, for example, in bargaining theory, right, to the BRI context in your study? And the second part, linking to question from Xin-Ya Guan, basically saying that the bargaining process is very interesting, but for the BRI, is there something go beyond, for example, aiming for mutually beneficial collaborations, how to achieve the consensus among multiple stakeholders, right? Would there be something also important, right? Of course, when you talk about bargaining at multiple levels, right? The port, the local government, national government, Chinese multinational companies, Chinese government, multiple stakeholders, right? So the question one, how does this help us extend the RB theory, right? In terms of big picture. Two, how do you address, Xin-Ya Guan's question about, how do you achieve consensus among these diverse stakeholders? Thank you, Peter.
Well, I think the first thing to say about this is that the devil's in the detail. A lot of the issues around foreign investment in a particular country look at just one level, one period of time. When we look at something that's evolving, like the Belt and Road Initiative, we have to look at it at a particular time and in a particular instance, because the extension, I think, of the theory that you're looking for, the single thing I would say that's most important is the importance of contracts. Ronald Coase, the Nobel Prize winner, always said, in terms of what research we should do, his answer always was, look at contracts. And so when we look at contracts, what we're looking at is property rights, who captures the value, how you protect your property rights, and so on. Now, Hinrich also raised the point about the difference between existing facilities and new facilities. By and large, in advanced countries, Belt and Road investments will be coming into situations that already exist. They won't be new, they'll be existing facilities. So we've got this multiple level governance issue. And the importance, I think, in terms of the theory, is to look at how that governance issue works out through the nature of contracts. And we saw there are many complications in the Italian case, like the golden power rule, where government reserves certain powers. And these will be replicated in lots of other countries. The issue about cooperation, again, is an issue about contracts. Who gets the value, how you cooperate on contracts, and so on. So I think the rights that are involved in contracts, the value appropriation, the exclusion, the ability to transfer rights, and of course the critical issue of incomplete rights, who gets the residual benefits and so on, are all crucial. So the way I would suggest that we extend theory and the way we bring Belt and Road into this is through this whole issue of bargaining and property rights. I could say a lot more, but I think that's probably enough for now.
Yeah, so thank you very much, Peter. Hinrich, I don't know whether you want to add a little bit, and maybe you can also help answer Ellie's question that, of course, do vulnerable countries have bargaining power? When of course, Italy is not necessarily, one but given your research, looking at the bargaining process between the ports there and with the Chinese state-owned companies, maybe you can talk a little bit about, does, for example, really the ports, do they really have a lot of bargaining power?
Mm-hmm. Thanks. Well, building on what Peter just said, I think the critical aspect in the extension of the would be really looking at the nexus of existing relationships that exist in a particular host country. But in the case of Italy, obviously, we have very well developed, very large and broad nexuses between existing ports, government agencies, which are at the local level much more stable than at the volatile national level. And some of those discussion points there can be taken to more vulnerable countries to come to that question. And what we would need to look into in detail is actually how is the port nexus structured in those particular vulnerable countries, right? Is ultimately port infrastructure owned by national governments? Is it locally owned? Is it owned by private interests? Because this is influencing the extent to which there might be different sets of bargaining powers residing with local actors. When, as in the case of Italy, ports are ultimately nationally owned, there's always the opportunity of national government to intervene and change course of particular bargaining processes when they think something is not in the national interest, or they're being influenced by other actors to reconsider investments in particular places. If we're talking about vulnerable countries where they have potentially a system where ports might be privately owned or completely locally owned, then the whole bargaining process is working at the local level very differently to something that is nationally owned, where, and I think as Ari said there might be aspects of trading off different interests against others that might be lacking in those kind of cases. Which comes back to Peter's point of saying the devil is in the detail. We have to see how particular poor or vulnerable countries organizing their transportation infrastructure, port infrastructure, and thereby opening themselves to having a stronger or weaker bargaining positions to Chinese investors coming in through the Belt and Road Initiative.
So thank you, Hinrich, and thank you, Peter. Okay, Ari, there are several questions for you. So we probably start with the first couple of questions. What are those projects not funded by Chinese sources, for example? How can they be part of the BRI, right? And also you mentioned concept like institutional complementarity, how that related to institution distance. And there's a question from Professor Lei Li from Nottingham University, Ningbo, China. He asked, how should the legitimacy gap be examined, right? So maybe we can start with the three things first.
Thank you. And of course, JT, if you want to ask some questions, feel free. So let me first just quickly follow up on what the questions were for Peter and Hinrich as well. So bargaining should actually not be seen as something that is a conflict. In fact, actually, very often it is through bargaining that a consensus is being generated. So it's very important to see this bargaining as a process that ultimately allows both parties to say, okay, now we agree and we go in a certain direction. So about the question that you asked, we think of the Belt and Road Initiative of being, we often think of it being entirely Chinese, but in reality, actually, what China is trying to do is make it more international. So the AIIB is a very important part of the Belt and Road Initiative, but of course, China has spent a lot of time and effort in order to make sure that the AIIB includes many other countries that also provide funding, and this funding also actually very often goes into the Belt and Road Initiative as well. So in the table that I showed, indeed, you do see that there are a lot of Belt and Road Initiative related projects that are not solely funded or completely funded by Chinese banks. You oftentimes have other actors that are involved in the process. concerning the question of institutional complementarity, whether or not is the same thing as institutional distance. Well, so the problem a bit with institutional distance is that you're trying to portray something that is very complex, like institutions, as something that is almost linear. And so in the varieties of capitalism literature, there is a lot of pushback against that. So for this reason, we opted for the term institutional complementarity, where it really is trying to see whether an institutional system in a other country is actually complementary to how the Chinese system works, and as a result of that is more prone to be accepting types of firms that have a institutional comparative advantage in China into host countries. There indeed were, Lilei and other people mentioned some questions about legitimacy. So this is a very interesting issue. I think that it's quite clear that certain firm types do face legitimacy gaps when they go into other countries. But this legitimacy gap, first of all, is something that is not only related to Chinese state-owned enterprises, it is against any type of firms, or it could be related to any types of firms. There might be some countries that are very skeptical in dealing with American private companies for certain reasons, and that can be a legitimacy gap as well. One thing that is important and that we discuss quite a bit in the future research discussion in the article is that a legitimacy gap is not something static. It's something that can be dynamic. What I mean with that is that in the beginning, JT pointed out that right now there are some hiccups related to the Belt and Road Initiative, partially because of the slowing down of the global economy, etc. So this is something that the Chinese government takes very seriously, because they know very well that if the state-owned enterprises that are executing Belt and Road Initiative projects are systematically in different host countries facing questioning and pushback, that this can actually have an influence on their legitimacy, not only in these countries, but also into other countries that are thinking of embarking on Belt and Road projects. So you can see here how the good or bad performance of Chinese state-owned enterprises in different Belt and Road projects can actually help in increasing or reducing the legitimacy gap in other projects as well. And so we actually discuss how this can lead to potentially different types of behavior of Chinese state-owned enterprises as the Belt and Road Initiative starts maturing.
Thank you, Ari. I guess, Lily also has a question about there are different levels of state-owned companies, right? Of course, there are also private firms from China. So the type of firms, of course, would have different levels. I think this also reflected in the model that you presented. Right?
Yeah, and absolutely, and I think that this actually links quite nicely to what Rui was pointing out in with his co-authors in their paper. So again, in the West, there is this view that the Belt and Road Initiative is something that is being pushed by the central government, but actually the Chinese economy is a very decentralized economy where provinces and even regions do have quite a bit of decision power, where to invest, etc. And so this has implications as well of which type of firms might have more legitimacy concerns. Of course, there are spillovers. So what regional governments do has influence on the perception that there is about central state-owned enterprises. This is a very fascinating research area. So if I take the three presentations that we had, one thing that I certainly take away from it is that all three are saying that we should be zooming in more as we're looking at the Belt and Road Initiative. Hinrich is saying zoom, and his co-authors are saying zoom into what is happening at the local level in host countries. Rui and co-authors are saying zoom into what is happening at more regional places. And what we are saying is, look, all these things are important because they're getting us to have a better understanding, a more refined understanding of how all this matters in understanding competition that is going on at the global, but also at the regional level in Belt and Road Initiative projects.
Yeah, so thank you very much, Ari. And the third paper by Ray and his co-authors, right? It's a fascinating paper which look at this subnational level, right? Look at the heterogeneities across provinces, right? So there's this question from Dimitris, right? Basically, this question for you, Ray. So you may want to, elaborate a little bit more. What exactly has been the involvement of the municipalities and provinces in the BRI so far, right?
Yes.
So again, we zooming in, right? Looking more at the subnational, provincial level. What type of insights that you can share with
Sure.
us?
Yeah, and that was, I totally agree with what Ari just said, and I think this sub-national level, it's critical within China, but also outside China to understand how these things work. And it has to do, of course, with the policies that are involved in each of these initiatives, and particularly this one that comes from China. But answering specifically the question, one of the fascinating things that we found out is that we went to, by the way, the qualitative analysis, just give a little bit of background. We went to analyze with the software, of course, all in Chinese, in this case, everything that was communicated by this meso level, so by the provincial level, everything that was communicated by them locally about the Belt and Road Initiative. And then we analyze this, generates thousands of course of occurrences in each of the provinces, and then we went to analyze with keywords, of course, what was going on there. And again, many of these things are formal, so they are saying we have a group of funding, for example, that will incentivize companies to go overseas or exporting or this or that. And that was what we call the formal institutional way of incentivizing the BNR. But the large majority of it was what we call the informal or the semi-formal, meaning the government was giving indication of things that they would like to be seen, that will be aligned with the central government. But many of these things were slightly twisted to the province's own agenda and resources, capabilities, and so on. For example, in Zhejiang, I remember perfectly to see some of the results that was much more focused on everything related with electronics and so on, whereas other province, for example, more in the central China, was much related with infrastructure with foods and commodities, for example, right? Because they have so much more experience with that. So I think what in a summary, Dimitris, what we've seen is that there is this macro level, but then it's really the provinces that are shaping these policies and incentivizing or sometimes telling companies be careful or shaping their ideologies and strategies, but much more on this meso level more than the macro level. And firms are following suit, right? That's what we established in our paper, which I think again it's quite fascinating. So instead of looking only at this macro level and going back to what Ari said, we should start looking at this meso level, particularly in large countries with this meso level, I would say, might be critical.
Yeah, so thank you very much, Ray. If I may add, I think it's fascinating. to look at this more refined level, and also look at the agency, right? The macro foundations, right? Because with the decentralization, of course, you have these, local leaders, right? The party secretaries of the province, or the mayors, governors, right? They have different type of incentives and career aspirations, right? In fact, I see some very interesting research in management area looking at the turnovers and of these, regional leaders and their political aspirations, and how that affects their decision-making behaviors, right? So in fact, you would imagine now we have the 20th Party Congress, people are looking for promotions with their careers, and this type of, so these are actually the motivations for these, decision makers in terms of having different type of policies, incentives, so that we can see heterogeneities and differences across different sub-national regions, right, in their policies and in terms of how they affects farm behavior. So wonderful, yeah. So okay, so again, let me encourage all the participants, right? Please feel free to type in your questions, right? So we still have a couple of questions here. We have not addressed yet, right? So Ari, there's a question here, from Jiayi Wang. So mentioning about the relationship between institutional complementarity and legitimacy gap, right? So legitimacy gap of the Chinese state-owned company, right? Okay. So how, the question is, does Jiayi's understanding of this relationship between complementarity and legitimacy gap is consistent, or and the second, how do we actually try to, if we do empirical work, how do we actually going to proxy for this? Of course, these are all very interesting questions.
Thanks. So the way I read the question is whether or not complementarity is a word that denotes distance, or whether it shows proximity. So the way that we have, so probably actually, if it would be semantically looking at it, what we would say is that complementarity means a little bit of difference, but not too much. But the way that we have been interpreting it in our paper is that ultimately in today's economy, there are certain countries where state capitalism is something that is frowned upon a bit more, where an active role of governments in intervening in business is considered to be something that is perhaps a bit more problematic. And there are many, many other countries in the world where actually this is not being considered to be as something that is to be frowned upon, and is actually something that is negative. And that ultimately, if you're looking at what the perception is of people or actors in these two different economies, that they actually will be having very different perceptions about state-owned enterprises. Again, you might imagine that in a country like the United States, when they look at a state-owned enterprise, and it doesn't have to be a Chinese state-owned enterprise, that there might be more of a questioning whether or not they perform well, or whether or not there are some political motives behind their behavior. And it might be that in a very different country like Mongolia, that this is something that is being perceived to be a very natural way of how the market economy might be working. And so what we are trying to delve into this discussion of institutional complementarity is that these features, that the types of capitalisms that you're operating in is going to be feeding into the perception that there is about certain types of companies, and therefore is going to be influencing how willing they are to to use bargaining energy to push for a different type of firm. So that is a point that we're trying to make in this article.
Yeah. So thank you, Ari. Thank you, Jiayi, for your question. I guess on this particular, institutional complementarity and complexity, we actually draw on the work of Dixon and Dixon and on the basically on the variety of capitalism, right? So you can refer on some of that literature. So I'm just go through all the questions. I think there's a question from Sichang Liu, which we probably, I'm not sure whether we have answered that directly. Okay, so you, Ari, so you have excellent work, interesting paper. What would be the possible way to measure the motivations of Chinese SOEs to invest in a particular BRI country, right? So relative bargaining power motivated the investment. How do you identify such relative bargaining power? So again, people are very interested in how do we actually going to implement the theoretical model that you presented.
So that's a great question. So one thing I did not explain very in detail or at all during the presentation is so actually in the international business literature, there already has been a lot of work on bargaining models, but generally speaking, these bargaining models have been presented as a two-stage bargaining model, where in the first stage you've got in this case, China and the host country perhaps negotiating a trade agreement or an environment in which business takes place. And in the second stage, then you have the firm conducting foreign investment into a host country. What we have argued, and we built on work by Li et al. In Global Strategy Journal in 2013, that actually when you're looking at state capitalism, that this model becomes a one-tier model where it's not really the SOE that is negotiating with the host country, but you have the Chinese government negotiating for the SOE. And so as a result of that, a two-tier model becomes a one-tier model. So when you're then thinking about the motivation of Chinese state-owned enterprises, well, a lot of the motivation of Chinese state-owned enterprises will be related to the motivation of China in the Belt and Road Initiative, where on the one hand, there are a lot of economic motivations. You want to ensure that overcapacity in infrastructure industries is reduced. You want to increase the development of neighboring regions that can lead to more economic growth in the region, etc. But there also might be some geopolitical motivations behind it in order to perhaps be able to better compete against the United States, that is in a more economic geopolitical battle. So ultimately, the motivations in this case, in our model, would be motivations that often would be related to what China's motivations are. Now, again, what are China's motivations? This is actually a question that we have treated in the paper as an issue that is related to China, but in reality, it can be very different for regional governments and for the central government. And there's much work that can be done about this, and that IB scholars can really benefit from as well.
Yeah, thank you very much, Ari. So I have, given the time, I just have very quick question for Hinrich and also for Ray, right? For Hinrich, so again, your study is fascinating. I'm wondering whether you can give us a little bit up to date, right? Bring us up to date, giving what's happened over, last couple of years with global, geopolitical, challenges. So what happened to these deals? Are there some changes? How does geopolitics affect these processes?
Yeah, I think it's an interesting question. The geopolitics is something that came into our work through the interviews that were conducted. Christian and Luis did a really good job interviewing a large number of port authority staff across Italy, because initially we wanted to focus on what's happening within Italy and across different levels in Italy. And it became quite apparent that certainly under the Trump administration, there was a push to consider and reconsider certain Chinese investments coming in. And it's those dynamics which Peter addressed earlier, saying the BRI and also the reaction to the BRI is evolving and is changing over time as well. And we have just recently had, and I think Christian was in the audience earlier at least, a change in the Italian government once again. The national government in Italy changed, which is arguably a bit more right-wing government, which might perceive and look at China and other connections very differently to the previous government, which will therefore have knock-on effects on its relationship with, say, the US and the European Union, to what extent it may be influenced geopolitically, but also how it looks at China and China's investments more generally speaking. And it's those evolving dynamics which are really interesting to capture, and maybe addressing question, as you put it to Ari, about operationalization of those dynamics. I would tend in the first instance to go down through interviews to understand through local actors how they perceive those dynamics, to what extent you have actors across the levels that are not frequently changing but remaining in posts, if you like, career bureaucrats that work through the administrations, and then understanding to what extent policy agendas of parties having influence on the change of how laws are being enacted, being enforced as well over time, to capture those dynamics, because some of those announcements we might hear from political parties might be just to appease certain voter groups, but might not have a material effect on what's happening on the ground locally. And where you have, like we currently see in the UK, a push towards significant policy change that's being pulled back quite quickly when they see it doesn't work. But it's those within those dynamic evolutionary systems, we have to see how things work out. Just a last quick note on there as well. I think it was interesting to observe that European investors were much quicker in negotiating access to Italian ports, which is something of those discussions that may come back to the point of legitimacy gap Chinese investors have vis-a-vis European investors in Italian ports, because it may be seen as more friendly, as more complementary to the local system, and thereby can negotiate access easier than some other investors.
Yeah, so thank you very much, Hinrich. So Ray, again, you look at, you take a decentralized approach, looking at the regional differences, but it's also because there could be competition among different regions. They might also provide opportunities from the host country perspective, right? Would you see what would be the impact of these, local competitions from different regions in China on the host countries? Would you think that would be something that we can study in the future?
Yes, and that's a very interesting topic that you just mentioned, because one of the things that we found is that even in Chinese and even to local media, many times there are references about, for example, bilateral relationships with cities or even provinces with countries. And therefore they say, look, we have, for example, now a straight relationship between Shanghai and Munich, for example, right? And therefore, the companies related with machineries are highly incentivized to look and search for opportunities in Munich, because now we have this opportunity. This is just an example. So you are totally right. There is competition, and I will say a healthy competition between municipalities in China and provinces, and therefore they have the incentive, particularly because what you said, the political aspirations, right, of their leaders, but there is this incentive for them to communicate, to try to establish relationship outside China, and BRR is just the vehicle, I would say, the mechanisms to help them to go abroad and say, look, we want to create a partnership between, for example, Angola and Nanjing because of, in this case, resources. But we found a lot of that type of relationships and differences among the different provinces, for sure.
Wonderful, wonderful. Well, that also help answer Demetrius' following up question that for example, a food company in a province, of course, the local government will provide incentive to support these companies to invest in BRI countries. Now it's good. Thank you so much for all our panelists for sharing your insights. Now it's a good time for me to check with my co-host, Klaus. I want to see if Klaus has any questions, and of course, Klaus will wrap up a little bit to see what are the takeaways from today's discussion. Klaus?
Yes, thank you, all the participants and JT for both good questions and interesting answers. I think there are some higher level issues that really come out of this conversation, and that is we need a much bigger focus on the multi-level bargaining that's happening in international business. And I've been thinking back in the 1990s, there was a lot of literature on M&E versus government relationships and bargaining and so on. And in the 2000s, that literature sort of fizzled out because people didn't think it was so essential anymore. I'm thinking of the book by John Stopford and Susan Strange, which was actually published in 1991. And then, of course, Jean Baudouin's work, and some of you may be familiar with those names. We haven't seen much on the government relationships in the last 15 years, I guess. And now we're coming back to it, mainly because of China, but maybe we need to think beyond China. It's not just China where the political dimensions come in, and therefore the relationship between governments, the relationship between governments and firms. And the other topic that really comes out, especially from Hinrich and Rui's papers, there are multiple players. It's not just central government and the multinational enterprise. There's the state firm versus the private firm. There is the intermediate level governments that are involved both in host countries and home countries. So there are a lot of different actors involved in this bargaining process. And I think that raises also a lot of questions for future research, both with respect to China, but also with respect to other countries. And so I think that is a very promising agenda, and I think as international business scholars we should focus on that, and maybe we should connect with the political science literature a little bit more, like someone mentioned, I think it was Ari, who mentioned realism, which is a concept that comes from political science. There is liberalism, which is a different view, and there is maybe currently a shift in understanding that maybe more people think realism is the way we need to think about the world, whereas in international business research, implicitly we had a view that corresponds to the liberalism view as interpreted by political scientists, right? So they're very important higher level questions that I think we as IB scholars should develop expertise and update our expertise to advise both managers and practice. And with that, I'd like to thank everyone who participated in it. I would like to thank the people who help organize it in the background. Just for everybody's information, the papers that we talked about have been published in the Journal of Business Studies or the Journal of International Business Policy. You all know how to use Google, so you can find that, although I've actually links on this particular slides. Here are the people that made it all possible in the background. Of course, we thank the editors of both journals along with the AIB, and my co-conspirator in making this whole series go, that's Dana Meyer in Copenhagen. Last not least, this important, yes, we do have the webinars on the internet. You can find them on YouTube, and this particular seminar will be available on YouTube in a few days as well. This is a valuable resource for your PhD students. And if you're interested in the link between international business and public health, we can meet again tomorrow, because as it happens, we have 2 seminars this month, and it's just on consecutive days. It's 1 hour later than today. We have some interesting speakers who address questions that have come to the forefront of everyone because of COVID. Thank you again, everyone, and see you tomorrow or at some other webinar in the near future.
Yeah,
bye-bye.
Thank you very much.
Thank you, everyone. Thank you, Klaus. Thank you, everyone.